Because what we saw, of course, recently was hammering not just in India but globally of the consumer tech stocks. In recent times, some of the consumer tech stocks have started to do better at a time when there's this whole discourse taking place that you need to move towards value versus growth stocks. Paytm, however, I would like to point out, is still below 550 rupees a share and a big stress point. The new age companies, what's your strategy? Did you use recent dips maybe to buy, to accumulate?
Not really. I think, if you, since you referenced some of my newsletters last year, we wrote in the middle of when the new tech was at peak that, we wrote a letter saying fade, FOMO fade. So this fad will fade away. People are acting out of fear of missing out. And whenever investors start doing that, out of, that psychology, we know that it's close to peak of bubble, right? And that's what has happened. According to me, many of those companies, and I said this publicly, I think one of the channels, that I have done banking all my life, right? All, people, IPOs which went public, in that phase, probably many of them won't exist in 5 years, 10 years down the line, and many of them will erode serious value, right? So whenever this kind of frenzy is there, idea is to always stay away. And I do believe that many of the new tech companies don't even have a robust business model. So we would stay away from that. Of course, it's not that we are blind to the disruption, but we also don't want to get bought into overplaying of this disruption theme. Sometimes I feel markets have overplayed this disruption themes. Of course, you have to constantly keep watching how business models are evolving, and some of them are incredibly good businesses. So I'm not making that point that they're bad, but you've got to be very, very mindful. As an investor, our job is to make money from a risk-reward point of view, not to be part of every party and just hang around there. So we have stayed away, and I still think that there is a fraud. I still don't think that they've got sort of cleared big time. So we will watch out. I'm not saying that we have not bought so far anything, but we're watching out everything.
Nithya, for someone who has, let's say, 2 to 3 year time frame, what should be that niche space within pharma one should watch out for? And I'm just going to amplify the question for our viewers. Biosimilars, specialty chemicals, API, where do you think within the pharma there is high growth and high scope of earnings?
I think the CDMO space is likely to see a bit of resilient growth. APIs, I think quality names will benefit from the China Plus One strategy. I think it hasn't played out yet because it typically takes about 15 to 18 months for you to register an alternate vendor, right? So it's not something that happens overnight. So we just need a bit of patience for the China Plus One to play out. So I think both the CDMO names, like somebody like a Gland, which I cover, or a Divi's, unfortunately I don't cover the name, but I would assume that CDMO and API names should see a bit of resilient growth. When it comes to pharma, we are not seeing secular growth, right? So we're not saying that everybody will grow. While India can be a secular growth story, we believe US won't be. We therefore like specific names, like from a long-term perspective, somebody like a Cipla or a Sun. Cipla because of their complex generic portfolio, Sun because of their specialty generic portfolio. So therefore, I would say that in pharma, you need to be a bit more picky.
As I understand, Santosh, India's labware market has been dominated by MNCs. And please correct me if I'm wrong here, with the exception, I think, of Borosil. As per reports, your company enjoys a 12.5% market share. What is the market share guidance and visibility that you have for the next 5 years? How much is it that you think you can eat into from the MNC portion?
See, total average Indian market is 1200 crore rupees, but our addressable market currently is only 650 crore rupees. Out of this 650 crore rupees, we hold 25%, right? And now we are also entering into cell cultures and PCR, right? And now we will also address the remaining 550 crore rupees. So going forward, we think that we are able to maintain the same kind of 25% share in the overall 1200 crore of market.